Good morning, traders. Today is the 23rd of June, 2021. My name is Neville Hornsey, market analyst for U Trading. And today I'm going to take a quick look at the dollar versus the CAD. Okay, starting on the active trader platform, we're looking at the sentiment indicator. And here we can see the dollar versus the CAD. 86% of traders that are trading the dollar CAD are bullish. And as that is an extreme reading, from my point of view, I'll be looking to be a contrarian trader against that. So I'm looking for dollar CAD shorts. If we go back in time to 2015 and then also 2017, you can see we had a swing low, but quite a significant one before a push higher each time. So a trend line underneath that, could have acted as support on the third test, but it didn't. We broke through. And on the back of last week's FOMC sort of more hawkish meeting, the dollar did rally, and that was good for the dollar CAD in terms of getting back up to this consolidation period here from earlier this year. We basically haven't made it into the middle of the range, so sort of 1.255, but we did make it into, we did sort of cross back into it, and then this week we've turned out of it. So it looks like they're going to reject the sort of 1.25 sort of prices. Another close above the 20 period moving average, and then I'd be waiting to see if we could get above this consolidation period. And then you've got these roadblocks, the 50 and then the 200, which would act as resistance. And obviously we've got price action from this market structure here, which was support, which didn't really get tested. So if this dollar CAD is to go higher, like the retail traders think it will, then 1.3 would be a target before maybe the next major sell-off. You can see there's also a consolidation period there as well. So what could drive the dollar CAD down? And that'd be higher oil prices, because the Canadian dollar and oil are quite highly correlated. So if we look to crude, you can see that we've been in this mad sort of bull run since the craziness of last year. We're approaching 2018 highs. The high in 2018 was $76.88 per barrel, and we're currently at $73.24. So getting pretty close. The stochastics are overbought, but you can see that that can stay overbought for several months, almost even a year. So I'm not going to pay too much attention to the monthly stochastic at the moment. At the moment, if anything, it's confirming that we're in a bull trend. The moving averages here, because it's the monthly, show that the 20 is above the 50. So if we go down to the daily time frame, you can see the 20, the 50, and the 200 are all very much in a bullish momentum, bullish trend, and any pullbacks to the 50 have been good buying opportunities when we've also got an oversold reading on the stochastic indicator. So oil looks to be heading higher. So dollar CAD should come down based on that alone. Oil is also looking like it's going to go higher because of the fundamentals. We've got a tight market in terms of supply for oil, and we've got increasing demand. And if we go through different news outlets, you can see here at the beginning of June, the Wall Street Journal reported that options traders are betting on returns of $100 per barrel oil. If we go back to the monthly chart quickly, the last time we were at $100 was back in 2014. So, several years ago now. And, it's not obviously unlikely, but it's going to, at this rate, it's going to still take a few months to get there. So dollar CAD could be moving down for a few months more. And if it was to move down, then my first target would be this market structure here from the highs back in 2014. So again, 2014 seems to be the prices that are most significant going forward. So something to consider there. If we look at the dollar index, I've marked up a few trend lines. If we've got 3 tests of a trend line, then it's quite solid. So when we broke above this particular trend line from the 2020 highs at the sort of peak of the pandemic, this little correction here could have been the start of something different, but we found resistance at this sort of market structure here from March 2020. So I think that's going to be a significant line in the sand still if we ever do approach. We have made a low, then lower high, lower low, lower high, and then we failed to make a lower low back in May. So the rally that we did have off the FOMC back last week has rallied all the way back up to the 200 period moving average on this daily chart. The stochastic is overbought. In the past, when we've been around the 200 and overbought on the stochastic, it has rolled over and we have sort of seen a couple of dollars decline. So I'm expecting a pullback at least to the FOMC. If I go back to the candle chart and just zoom in. So this candle here was FOMC last week. I do expect this to get tested. So that would be like a pullback into the sort of smaller moving averages. And then we'll have to wait and see, I guess, because I'm also looking at the long bond. If we go to this chart from the Fed database, I've got here the trade weighted US dollar index. So that's in blue. And you can see how we have been coming down since March 2020. And now it's sort of ticking up. And then I've also got, say, the 30-year Treasury maturity rate, and I've inverted it because rates are inverse to the bonds themselves. So this is basically now the 30-year bond price action. And you can see that they're quite highly correlated. As bonds move higher, dollar generally moves higher. If bonds signal a move down, then the dollar can move down. And obviously they sort of take it in turns to lead. But generally, from 2008 to recent times, it started off in the bottom left-hand corner and it rose to the top right-hand corner. So they kind of trend together, maybe not instantaneously, but generally. So going back to here, if this bond TLT ETF is to be rising, maybe it did find support at the 200 period moving average on the weekly chart. If it has broken higher out of this range, this sort of, maybe it's accumulation range, and it has retested and is ready to now sort of move on higher, that is going to signal that bonds are going to go higher. And that's where I'm thinking maybe this dollar could rally over, a period of time. Obviously, like I said, it's not going to be instantaneously. It might take a few months, but we've already discussed that dollar CAD could be coming down for a few more months. So there's going to be a bit of push and pull between the dollar. I do believe that oil is going to be moved by fundamentals. So we're going to look at supply and demand. We're going to look at the OPEC plus meetings. We're going to look to see if Iraq and Iran bring more oil to market, all that type of stuff. And, demand data, if the coronavirus should, set a new wave in the autumn, for Europe, then that would decrease demand. There's going to be lots of things going on over the next few months to consider. But for now, it does look as though the dollar has found resistance. A break higher than April's high would be a signal that we're clearly going to be looking for a higher low and then a higher high again. A break of this dashed trend line, that could also signal 93s are more likely, and then this would become like some sort of inverse head and shoulders maybe. So lots of things to consider, but we have to trade what we see. And at the moment, I'm seeing resistance on the US dollar. I'm looking for lower dollar prices. I'm looking for higher oil. And so I am thinking that I'm going to go against these retail traders and I'm going to try and short the dollar CAD down to this sort of 2014 market structure. I am wrong. Like I said, if dollar CAD gets above this balance area, gets into the 50, gets into the 200 period moving average, and then we'll be looking for higher highs, higher lows, and a trend to sort of retrace this big move. Okay, I hope that makes sense. So I sort of explained how I'm thinking about this. I'll speak to you later.